The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, looking good, Billy Ray, feeling good, Lewis. Well, folks, I posted the chart from the London Tube. This is this morning, folks. You can see it's packed, and hardly anyone is wearing a mask, from what we were told. I mean, this is pretty bad, folks. I don't understand why people are doing this, but that's it. I'm going to go over this one more time just to show you the mathematics behind this. Let me get this up here to take a quick look at it. Here is the mathematics behind it. You'll see here, 3 weeks ago, we started it here in the United States. We had 8,700 infected. Last week, we were at 1734, and this week we're going to be at 69,000 at the end of the week. I think we're at 42,000, so we're actually running ahead of that now. And we're using some type of a, common sense approach to, separation. So this is not good, boys and girls. It really isn't. This is going to be a little worse than we thought. Also, I also have something that doesn't happen very often because I spend a great deal. I haven't had a chance to talk to 20 yet this morning, but this is what I'm showing last night in the spot gold. This is from Kitco, which is a New York company that does spot gold. You can see here they're showing a $100 drop from 16. Well, actually, we went to 16.99 to they're saying to 15.69. I do not show that at all. The biggest drop that I'm showing is a $50 drop in gold. If any of you that follow gold over the night can see whether that is different or not, I would certainly like to know that because it's very important, because that determines the swings of what we're watching right now. So we'll have to wait and see what's going to happen. Well, we'll take a look here at some of these markets here, and we'll see what's going on. Try to keep your wits about you, folks, because people are getting a little afraid at the edges, as you can see. But that's neither here nor there. Okay, let's take a look at a couple of these markets here, and then we'll get moving on. Look at the DAX here. This is where we are now. We've had a nice rally here in the DAX over the last few days, mainly because they're pumping money into the economy over there too. Folks, this is why gold and silver are exploding to the upside. If you remember, we were showing you that 1177 in the silver was a 78% ABCD on the long-term weekly. Exactly. We've rallied $2 an ounce, actually a little more than $2 an ounce. And so that, wow. See there. Oh, wow. See, I don't even show that at all. Boy, oh boy. Wait, that's 6 p.m. Monday. No. That's. I saw that 1563. They saying that was after it hit 1670, and I don't believe 6 p.m. Monday. No, that doesn't show that at all. Wow, maybe it does. I don't know. Whew. Wow, if that's the case, shut the front door and raise the rent. That's wild swings. That's what we like to see, for heaven's sakes. Okay, those of you that follow the Fibonacci 24/7 service, we bought the crude oil the other day at the 21.88 level, and we sold it yesterday at 24.38, I believe. So we're flat that, and we're trying to get in some of these swings. I haven't started doing the futures yet, but I'm certainly going to. I'm going to give it a day or two till we start getting crazy. But what's going on with the economy, folks? We've never seen this before. Trust me on this. I mean, what the Fed is doing is totally unprecedented. They have turned on the printing presses, and eventually that's going to mean, more dollars chasing fewer goods, and that's inflation. and that's going to be inflation to the big time. They're basically they're saying, we're saving this. It doesn't make any difference to our great grandchildren or whatever, but they're not going to let it go down from what hey, wait, let's see, they're not going to try to let it go down, because if some morning you wake up and your things have gotten a lot worse, then you know that that's it. It's a debt market blow off, to say the least. I've said from the very beginning, this is all about debt, and they're going to take it to levels probably that we've never seen before. We're having wild swings in the usual quiet Treasury bond market. Nothing to see the bonds move a point in a matter of a few minutes nowadays. Would I short the dollar here? Yeah, because you don't have to risk very much, for sure. Look at the euro. They went right down to those levels and stopped, right at that 1.27 expansion. We've been short the euro for a very long time. We covered all that at 107.70, and we sold it at 113.30. I mean, I posted that, for you guys when it was happening, because it was a really perfect example of how markets, react. They make a big high, then they snap back, and you look for that little snapback picture, and that's what we're, trying to do. But you don't always get that. But, that's why when I see these prices in the gold market, it really doesn't. It really surprises me, because I never saw a $100 drop. I'm 100% that didn't happen on my machine. Now that doesn't mean it didn't happen, because I've got good data sources. But until I call Twentyman tonight or this morning, I'm not going to believe anybody, because Twentyman has perfect data, and so I will know that. But there's someone has told me that the Kitco, the prices hit almost $1,700 and dropped $110 an ounce in just a matter of a few minutes, and then of course snapped right back. That's not good price action if you're bullish, folks, because there should have been buyers at that stuff at $50 lower. That's what usually happens. So we'll see. Someone's asked me the question about the crude oil. Why isn't crude oil, down trading near $9 or $10? Hey, I don't know, folks. I'm a technician. I just look at what the price is. Yesterday, the crude oil was acting, and this was Sunday night. Crude oil was acting incredibly bullish. I posted that several times yesterday, because the crude oil had very bad action. Here, I still have it. Let's just get this up here. This is where we were Sunday night. Just take a look at this. You see, there we are Sunday night. You see the S&P's limit down, Dow's limit down, NASDAQ limit down. Here's the first sign of a bottom. We got bad news and good action. It's only down $1. And look how quickly it comes back. And you had a beautiful double ABCD pattern there, and you can see the 3 drive to a bottom pattern, the larger ABCD. I mean, that's it. So if you're going to short the dollar, wait for a pattern like that, and then go for it. This is just numbers. That's all it is. And last night, if you'll notice, we got up to almost 25. I think we got to almost $25 an ounce. A barrel. So we'll see here. We got a possible question coming in. 877-927-6648. John, how are you doing this morning?
Good morning, Larry. I'll hold through the break.
All right, my friend. We'll be right back. John from Philadelphia. 877-927-6648.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today. TFNN is launching an open house for our Tiger's Den. For a limited time, you can get a 30-day free trial to the Tiger's Den. Just enter promo code OPEN at checkout and pay nothing for 30 days while you try out your Tiger's Den membership as part of our open house. With market volatility at an all-time high and people all over the world working from home if possible, TFNN is hosting an open house in our Tiger's Den. The Tiger's Den is an interactive chat room that runs all day where other Tigers and Tigresses discuss trading ideas with the hosts and members, along with charts and current market news, as well as live access to the charts the hosts use during their programs. Join us for the Tiger's Den Open House. Begin your Den membership today by just entering OPEN at checkout and pay nothing while you try things out for 30 days. For all the details and to start your Den membership today, visit the front page of TFNN.com. Don't miss out on the TFNN Tiger's Den Open House taking place now. Sign up today.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, we're back, folks, and we're talking with Mr. Z from Philadelphia. John, how are you doing this morning?
Larry, it is Tuesday morning. It's 9 o'clock New York time. I've been up trading since Sunday at 5:30, and I'm already exhausted. I'm ready for the weekend.
Yeah, and I've got you by 25 years, Bubba, so you can imagine what it's like for me. What can I do for you, my friend?
Just a point of fact, COMEX Gold at 7 a.m. hit its price peak for the day thus far at 1698. That is effectively an exact retest thus far of the 1704 prior high. I think that was back on Sunday, the March 8th. So 1698 high, and the low is, in fact, 1651. That occurred there at 8:30. So if anybody was saying, spoke to you saying it was $100 lower than that, that was just bad price data. So 1651 was the bottom. My data is good. There's no discontinuities in my price data charts. I'll secondarily share with you just a commentary on COMEX Silver. Larry, you've been at this activity far longer than I, so you probably have firsthand knowledge, where mine is only reading the history, your firsthand knowledge of the failure and closure of 3 contracts that no longer exist. They were all agricultural. 1 was the onion futures contract, 2 was the potato futures contract, and 3, the pork bellies. A partial experience of those types of failures is ongoing right this minute, past 2 weeks in the silver futures. I'm looking at May COMEX Silver. I can buy and sell that today, right now, at $14.15 an ounce. And in the past 4 business days, I've been in touch with 3 of my very reputable, very experienced, and 30 years minimum experience, and I can't get silver bullion for less than 19. So there's a $5 premium to COMEX price. Now, what that is telling us is while the COMEX silver contract has not closed, I mean, it's still trading, but it is partially failed. What does that mean? That means that somebody who is buying it, and, you know, there are plenty of market players in COMEX silver futures, you know, who've got capital in the billions or tens of billions of dollars. And those players, one or several of those players, in bidding only $14.15 and not $19 an ounce, is saying it's not in effect. It is just plain saying you cannot take this contract as an owner and show up with that contract and your cash and appear at the COMEX-approved warehouse and get your 5,000 ounces of silver. You just can't do it. If you could, that buyer, that multi-billion-dollar capitalized player, would pay up to 18 because then he'd go to the warehouse and get it for 18, and then he'd sell it to my dealer, who would sell it to me for 19, and he'd make that buck. So the the COMEX contract is on what I'd call partial failure. It's still open for trading, so it's not failed like potatoes, onions, or pork bellies. But the fact that it's trading at, you know, a $5 an ounce discount to what you can actually get the bullion for, and that's the market. COMEX silver is not the market for silver. That's a paper financial contract. When I say real, the market selling an ounce of silver bullion for U.S. cash dollars. It's 19 right now. So I just share that discussion with you. And when anybody's dealing with the COMEX silver futures, you preached, you've taught me well, I've come to learn intimately, risk management is key. Understand you're taking this risk of not only partial failure, but permanent failure of a financial contract that we're seeing in real time, right here, right now.
John, I think you're probably 100% correct because I've seen this in California this past weekend. One of my good friends wanted to buy some silver rounds, the double eagles, and he couldn't even get any in LA. He wanted to buy 100, which is normal quantity, but the most he could get was 20 or 30 at 3 or 4 different places. They're just totally out of stock. And you're right, the silver is lagging badly. And yet the spot price for dealers and stuff is a lot higher. Now we've got about a half a dozen dealers that listen to this show every day because they're in contact with me quite a bit. So if you see something different than this, please let us know because this is what I'm seeing. And it might be the fact that we've always heard the rumors about the shenanigans that go on in the silver market, and that's happened since the dawn of time, I guess. But you're right. There's a tremendous observation there that the price of the rounds is a whole lot different than what we're seeing in the market itself. So,
and Larry, I'll share this with you. Of course, you've got a couple of decades on me, which gives you a deeper experience base. But I've done my best over the decades to research things. And while I've never met and spoke to physically anybody who was intimately involved with the failure of the onion futures contract back, I think it was in the 50s when that failed, I have spent the time and had firsthand contact with people who were intimately involved with the eventual closure of the pork belly contract, but more importantly, that potato futures contract. And so in having that experience, I can just plainly tell you, failures of financial contracts, derivative contracts traded on publicly listed exchanges, this has happened before. It's not like it's a brand new revelation. It's not frequent, of course, but it's happened before. Sure. And so all we need to do is, is look at what we see happening presently, and you can, make some educated deductions, not knowing absolutely for sure. And frankly, that's not the important thing for you and I and most of the people listening to this show. The key is risk management, and understanding the risk inherent here in that particular contract is, something that's imperative to do. So there we are.
Well, John, back in 1980, in January, when silver, got to $54, $55, the spot silver price itself never traded much above $37 an ounce. And I was involved with that daily with Handy and Hardam and the 12 coin dealers that I was dealing with in the LA area when I was at Drexel. I was hedging their stuff, so I was really familiar with that. The bags got to about 36,000, I believe, and that equated to about $37 an ounce in silver. So even though it was showing 54 on the board, silver never came even close to that price. So that you're right.
Let's see if we can stay focused and awake through the end of the week, Larry.
Okay, we'll be right back, folks. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks. We've got a caller from Kansas. Robert, are you there?
I am, Larry. Good morning.
Good morning to you, my friend. What can I do for you?
Well, I'm calling in the past you had helped me with open interest, and so I went into the CME group website and looked at it for the TL or the Treasuries. I'm interested in the TLT, and the open interest for the Treasuries or for the U.S. Treasury bond futures dropped by like 31,000. And I just wanted to get and the price has been going up, and I think from that perspective, it means prices rising, open interest falling, the market is weakening. And given what the Fed's doing and injecting money into the bond market and stuff, I still wondered if you felt like we're at a top or a bubble on the Treasuries. If you could just kind of share your thoughts on that, please.
Robert, I really believe that that's what's happening. I believe what's happening is the exact reverse of what happened in the early 1980s when Jimmy Carter brought in Paul Volcker, and he, got Treasury bonds that were trading at about 50 cents on the dollar. Around 56 is where they were trading at. They're now trading at 170. He's doing the exact opposite of what Volcker did. Volcker put on the harness and stopped everything. And what this new guy did, Jerome Powell, it's not his fault. I mean, there's a whole bunch of others, but they're just opening the floodgates to try to help everybody. And eventually, this is going to lead to an inflation of some kind because you got more money chasing fewer goods. It's going to create some great opportunities going to happen in these commodity markets and stuff. But that's how I see it. May be different this time, but that's what it looks like to me. I think the TLT. It's been on. The high was I don't know where the TLT was, but the bonds were 192. We got down to 165. We rallied up to 181. We're now trading at 177. Swings like we've not seen before. So a flight to quality, you have to have a seatbelt on if you're thinking about a flight to quality on that. So that's my 2 cents worth. But Robert, you got to remember now, I'm a technician. I've got a master's degree in business, but that's been so long ago that basically it was to find out who was going to go retake retirement first, Sears or Roebuck. We didn't know, but this is a lot different now with all the stuff that's going on, and the news is instantaneous, and a lot of times it's bad. So that's why I look at the charts to try to tell me, and I hope that helps. But I do believe that interest rates are going to go higher, not lower.
It does help. Tom O'Brien mentioned you a few weeks ago on his segment and said that a person should call in, and these long, wide-ranging bars, he says you can glean a lot from those.
Yes.
What did he mean by that? And he specifically said you're the master of that.
Well, I've studied a lot of them. The reason why you have long-ranging bars, it shows you the continuity of thought among traders. In other words, if they're all moving in one direction, you've got people start buying, people have to short in order to get the other contract. So the person on the other side that is shorting that into a really strong market is usually a commercial. So you wanted to see if these wide bars, when price have wide bars, you mean you have more, on the upside, you have more buyers and sellers, and on the downside, you have more sellers and buyers. We were just chatting about this in the gold market. How could gold drop $120 overnight? And they're showing this on Kitco, which is a big, big site. I mean, that's a huge site. And it didn't even come anywhere near that. And Twentyman just told me his data is saying the same thing. It only dropped $50, not $120. So that's why the data is so very important. But when the open interest, when you see open interest dropping, and you see prices dropping, that means that your market's increasing. But yesterday, that open interest figure with prices going up, that was short covering. That was not telling you that the market was strong. So that's what I'm seeing. I mean, I don't know why interest rates would go higher from here, but that's what my charts are telling me. And believe me, I'm wrong a lot. So pay close attention to that. I hope that helps, Robert.
Well, thank you so much. It does. I appreciate you taking my call.
You bet. Thank you so much for calling in. And I love Kansas. I think that's one of the great states. Of course, I think the other 49 are pretty cool too. Thanks a lot, Robert. You betcha.
They're all great.
Yes.
Thank you.
Okay, folks. The reason why I trade gold almost every day, and when I see discrepancies in the data like this, because several people sent it to me this morning saying, "Gee, gold had $100 break," and last night was one of the few nights that I slept And so when I got up about an hour ago, I was the first thing I tried to do was check this, and I couldn't find anything. And Twentyman, he doesn't get up early, so I had to wait until just a few minutes ago when he let me know that no, he didn't show that either. So, and his data is flat out spotless. So that's what we're watching here, and we'll see what happens. Now, we did get back to that 1700 level last night. We came really close to it. I believe it's 1698 or something like that, and we're trading a few bucks under that. So that's interesting, but it's a really great market to trade. Someone's challenged me about the silver in 1980. Folks, you can challenge me all you want, but I was physically involved in the spot market there in the silver because I was hedging bags for American Coin. I was hedging bags for all those guys over there in Los Angeles. And believe me, it was not anywhere near that price. I know that the boys from Texas, the Bunker Hunt guys and Lacey Hunt were doing their things with the Arabs, but the spot price at Handy and Harnum in Los Angeles, I don't think it ever traded at $37 an ounce, even though the spot price was trading at $54 because it was limit up several days in a row. It's speculation. And what happened is the people in New York, the guys that were short, the members of the exchange. So what did they do? They said, well, we're really short. How are we going to get out of this? Hey, let's do this. Let's raise the margin by 200%, okay? And let's limit the speculation to liquidation only. No new short selling. Gee whiz, what do you think happened then? Oh, boy. The market just totally collapsed. Anyway, that's neither here nor there. So that's why I follow the data, look at the prices, and it gives me a rough idea of what we're going on. Regarding the stocks, we're limit up here just a little bit. I don't know if we're still limit up or not, but he did not go broke, Marshall. He just lost a lot of money. That they had a lot of money, so he did not go broke, but he lost several $1 billion. I think Lacey might have, his brother might have, but I don't know. I don't think Nelson did go bankrupt, but that's so long ago. My God, you're talking 44 years ago, 46 years ago. Shut the front door. How can I still be doing this and enjoying it? The stock market, folks, we're in big trouble here. When you see a picture like what I posted to you in London about the tube with all these people, they're not taking any care of this. And that just means that, it's just going to get worse and worse over there. Hopefully, we're doing some good things here. I really see it here in Tucson now. We're starting to see less and less people, and that's really good. Sarah and I haven't been out of the house for a couple of days. It's not been. She's been able to put up with me, so we'll see what happens. 877-927-6648.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the Tax Opportunity Zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190. The gold market has taken off topside in a large way in 2020. If you want to take advantage of this sector, now is the time to subscribe to my gold report. The gold report took profits in 4 of its equities in the gold portfolio in the first week of January for a combined profit of 99.2%, with 2 positions left in the portfolio that have a profit of 67.5% as of January 7th. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Trading Hour with Tom and Tommy O'Brien. Next.
Okay, folks, I wanted to talk just a little bit about the subject matter. We were talking with our friend over in Kansas about this wide-ranging bars. I've just posted the chart of the monthly DAX chart, and you can see the down move that we're having here. Folks, this is a giant wake-up call. We've seen it here in our country, too. And we're having a nice rally here for 2 days, maybe 3, I don't know, maybe 4, maybe 5, maybe 10, maybe a month, I don't know. All I know is that we're going to be lower here in a month than where we are right now. And all I'm doing is watching to see, what the corrections are going to be looking at, and then I'll have a better idea of what I think is going on. Should we get above 2,500 in the S&P, I might change my mind for a day or two, but I don't believe we're going to get above that spot. And we'll see if that's going to be the case. The thing that's most troubling is when you see the people in London doing what they're doing. I mean, this is not good. Most other countries are actually doing pretty good as far as, the social networking and stuff. What do they call that social stuff? Social distancing. Now, Sarah had a really great idea how to get around some of this, and so I'll post you what we did here in Tucson to show you what we're looking at here. This is what we've done, and so far it's been working pretty good. Mr. Z's talking about this new moon that we have today. We have a new moon. We have apogee, which is as far away as the moon gets to the Earth, and this is also known as syzygy, and a great little Greek word. But that's what they call a super new moon, when you have all of these lining up at the same time. I don't know if the moon is directly over the equator, but if that's the case, then it certainly is. And that usually means you're going to see some really wild swings. And because the moon is so accurate at picking in gold, this is where I'd be looking for a top in the gold market. And I've told a few people that if you're in the silver, this is where I would be booking a profit, because you've made 2 full dollars in silver, and that's not easy to do. And so I would say take some of it. You might have to buy it back at a higher price. But folks, if you remember, ever since I've been on the air here it's been 12, 13 years, I've always said the two things that I would really look to do, especially recently, of course, was the buying volatility, and also to buy the silver rounds at $14. And now they are very expensive. I looked here in Tucson, just a couple of my buddies that own the shops here, we play poker together, and nobody's playing poker, and not many people are shopping, and they're out of silver rounds. They don't even have any. And he said if he did, he would sell them for more than $20. So I don't know. I talked to one of the dealers here at TFNN, called me over the weekend, and said there was no problem, that he had a good supply of that, and so you hear different stories here and there, but we'll see what's going on. I really don't know. All I'm telling you is reporting what I'm seeing, and sometimes I'm not even sure if that's correct. So let's always keep that in mind. The internet is getting slower and slower. I don't know if you folks have realized that. Just to give you an example, online poker, we can't play online poker in Arizona because it's against the law, but some of our friends here at TFNN play all the time, and it used to be tournaments would usually be between 50 and 100 people. You put in $10, and then the first 5 people split up the money for the other 50. It's good entertainment, but now instead of being 50, there's somewhere between 500 and 5,000 people playing in these tournaments. So you put up $10, and if you get into the top 5 or 6, you're going to make $3 or $4 grand. So that's where a lot of the people are going for entertainment. I'm sure they're using Netflix more and more. So we'll see that. Also, folks, remember, I've also mentioned the price of Apple, that very critical price of $3.25 a share. We went below it yesterday. We got down to $3.12. We snapped back above it. But, this is not good for Apple doing what it did. That is telling you that the people that are in Apple are getting nervous. And the reason why they're nervous is that company pays back 94% of the money that it brings in, either in stock purchases or dividends. And so if they stop doing that, that's not going to be a good stock to hold. So watch Apple, because if it starts to fail, that's where the problems are going to lie. This is all about debt, folks. It says credit spreads and debt. There's people out there that are in big trouble, and the government has turned on the spigot to bail them out. And if it doesn't work, that's where the real problem happens. Hey, no matter what happens, we're going to come out of this really great. And for traders, the shorter term stuff like what we do here, this is going to be an ideal situation where you see $3,000 and $4,000 swings in crude oil. You don't have to risk more than a few $100s to get in. Now, I haven't posted any intraday trades. Specifically, I've talked about some important points and stuff. But the reason why is they've raised the margin on most of these contracts. It used to be we were trading, $6,500. Now it's $13,000, and the price is lower. So the firms are protecting themselves, and that's why is they're protecting you and they're protecting themselves by increasing the amount of margin, because the swings are so great. Hey, we get the $10,000 swing in the S&P almost every other day now. You know what I mean? Yes, the car payments and mortgages, that is most probably what they're going to do, Dennis, from what I've heard, is that they're going to only make the interest payments and not make the mortgage payments. So we'll see that. Yeah, look at that, $45,000 a contract, and that's probably low for palladium. So these things. The reason why those margins are set, folks, is set by the exchanges, and the reason why is to protect you and also to protect them. Remember, in the order of preference, the exchange protects itself first, and then the members are second, and then the clearing firms are third, and then what? Who's way down there in fourth? Everybody raise your hand, because that's you. You're the last one they're worried about. So they are trying to protect you, but they're protecting themselves first. Most of these guys have been around. There's still some old dudes around that, hey, look, this is what we got to do, and that's what they'll try to do. The people that get in trouble are these like my old grandpa used to say, these young whippersnappers that don't know what the game is about. So that's the real things about that. I can tell you stories. Jimmy's saying about his grandfather, great-grandfather, stories during the Great Depression. I will tell you this one here. This is a true story. My grandfather had money in the little bank there in Clinton, Indiana, and it was not a lot of money. It was like $1,500, but $1,500 back in 1932 was you could buy 3 Ford automobiles, or even better, you could have bought one of Gartley's books. But he went to the banker's house that night and actually made him a deal he couldn't refuse. And the next morning, he got his money out of the bank. And so that's what I heard the story, and I heard that from my grandmother. So that was long after my grandfather had passed away. Hey, folks, we're going to get out of this, but boy, when you see stuff like what's going on in London, it literally turns my stomach, because we got to get away from, getting around everybody, Who knows? Well, looks like I've lost audio here. How many people in here can hear me? Broadsword to Danny Boy. Broadsword to Danny Boy. Come in, Danny Boy. The eagle has landed. The chicken is in the pot.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
With markets trading with extreme volatility and peaks and troughs everywhere, regardless of what you're looking at in the markets, this is a great time to see the type of analysis Basil Chapman delivers for his subscribers every market day with the Opening Call newsletter. Basil has been analyzing markets, providing his take for subscribers to his trading services since 1984. Every morning, Basil publishes an update for his subscribers, along with weekend and evening updates when warranted. The Opening Call provides traders a daily market overview with regard to the direction of the key indices, selective stocks, and commodities, along with specific recommendations, including stops and targets. You also gain instant access to Basil's subscriber webinar archive from earlier this year, a dark cloud cover, and essential market analysis. Ride the Chapman wave today by signing up for the Opening Call newsletter on the front page of TFNN.com under the newsletter tab. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, folks, we're back, and we're going to be looking at some quickly. I put a chart up here of the E-mini S&P, the 4-hour chart. That's my roadmap. We made a little bit of a 3 drive to a bottom yesterday. We're in the midst of a 3rd day of the rally, Monday, Tuesday, Wednesday. If you count Sunday, that would be 3 days. But I don't think we're going to get much more than Tuesday, and then we should start down again. Could start down today. That's close enough. So we'll see. There's going to be some really great opportunities. I'm certainly going to be looking at the other commodities, the grains, and a little bit of hogs and cattle, because there's going to be some really great opportunities. We're starting to see them pop up, and those of you that nobody was around during the Great Depression, but during that time there were some incredible values. This is how John Kennedy's father, Joseph, made all of his money. He was buying stuff on the cheap. He bought the merchandise mark in Chicago, I think, for $1 million. And when they sold it, when the Kennedy family sold it 45 years later, I think the rent on it was $12 million a month. Can you imagine you paying something you paid $1 million for it, now you're getting $12 million a month as rent? And that was 30 years ago. So you can get some really great deals. So we'll see what's going on. The main thing is, folks, stay away. Try to help the elderly. Here where we live in Tucson, there's a whole bunch of them, and they don't get out. So do what you can to help them move around. But stay away from crowds, and stay away from the babies. As much as I love them, they're like little culture tubes. So you certainly want to do that. But really do what the government's trying to tell you for the first time, and that is don't go out into crowds, because it's not a death sentence. It's just it could be a death sentence. That's the problem. But when you see what's going on in London, they're just totally forgetting it. Same thing in Ireland and Scotland. They're not heeding any warning. The young people here are not heeding any warning. They think it's baloney. Get the flu, and no big deal. Well, the trouble is they see their grandpa and their grandma, and boom, they're gone. So that's the problem. So live every day in an attitude of gratitude, and may God bless. We'll see you on the flip side tomorrow. Oh no, I forgot my. Oh, shit.